Mavericks, welcome out to your currency midweek for August 3rd, 2022. Corey here with you. As always, just a quick reminder to make sure you follow your trading plan. So it's nice to be with you. Let's talk a little bit about this week's review, kind of what's been happening so far. And there's a few different things that can be market movers, but for the most part, it's a very quiet week. It's not a whole lot going on. Stocks are above short-term resistance. This is likely a bit of a correction in an otherwise bear market. So I know a lot of people are optimistic that, hey, the bear market's done, the bottom is in, we're never going back down, and so forth. I'm not so optimistic. Now, I've been an ardent bull, right? The last few weeks I've been talking about I expected a nice rally, a big bounce back. I talked about how everything that was negative is already known in the markets. All of these things have been priced in for many months. So we should have this corrective phase. We should have this nice rally, kind of risk on environment in currency land. Now, I think it's long in the tooth. And in fact, even today's price action, I would look at as kind of more of a finishing type of point, more of an kind of an exclamation point at the end of this sentence that's been rallying, to kind of put it into perspective and we'll talk about that. But I think it's kind of done. I think for the most part, most of the upside is accomplished. And now we'll probably go into a little bit more of a sideways range and then quite probably, in my opinion, from there we'll probably even go into a little bit more of a downward trend. And I don't really anticipate that the lows are in the markets. I think the next couple of years, and we've touched on this, that they're going to be rough. They're going to be a little bit more difficult. We're in this phase where quantitative tightening is in effect. And the best way to kind of explain maybe how inflation works is it's kind of like alcohol or something like that. It's like, people do it because, well, there's a positive, and that happens early, right? That happens early on if you drink. And then obviously the negatives come later, the hangover, what have you. And with inflation, it's kind of the same way in that when you print money, the positives of that happen early, right? It will fuel risk taking. It will fuel asset prices to go up. It will seem like everything is great. Well, the negatives come after that, right? And so after, it's kind of the hangover, and that's the phase that we're in. Well, quantitative tightening or a reduction in inflation is going to be the opposite. So now we're in this space where we've got to reduce inflation. And so we've got to tighten up. We've got to, the opposite of money printing. We basically have to raise rates. We have to take money out of the system. And the negatives from that are going to happen early. And that's where we're at. And then the positives will come later. So we're in this phase where, for the next few years, we're going to be in kind of the hangover phase. We got a little drunk, we printed too much money, and now we're going to pay the price, and it's going to be a bumpy ride. That's my opinion. That's how it plays out over the next couple of years. So what do I like? Well, there's only one thing that I'm even interested in trading, and that's the Japanese yen. The Japanese yen, I don't care which pair you trade so much, is that we just look at that as a trading opportunity. Commodities, they've come off. Inflation has peaked. We touched on that, but that doesn't mean that inflation is done. It just means that it's peaked. We're coming down from 9%, but it may only come down to, stubbornly high at 4%, at 5%, and those types of numbers, which is still too high and still requires more reduction in that. Bitcoin is stabilized, but I wouldn't say we're, super optimistic on that. If you think equities are going to have another leg lower, Bitcoin and crypto in general is a risk asset. It tends to move with and positively correlated to risk taking. So not super optimistic on that front. Now, manufacturing PMI and services PMI both beat expectations here in the US, which was nice to see. The RBA raised rates by 50 basis points. Central banks around the world are now in tightening mode. As we come in to look at this week, Everything relatively sideways. I mean, across the board, there's just not much happening, with a couple of exceptions. Solana is down sharply, and there's news that there's hacks, and I'm no expert on all of crypto and wallets and this and that, but apparently there are big crypto hacks taking place in Solana, and thousands of accounts have been compromised and so forth. That's why that currency specifically is being liquidated aggressively. And then oil. Oil is down sharply on the week. As we look at the price action in markets, I pulled this chart a little bit early because we've extended even further. And the way that I would think and talk about this would be as follows. So if we think about price action, if you just say, well, there's a big bullish candle or something like this, is that bullish? Is every time you see a big bullish candle bullish for the market, for the stock, for whatever? And the answer is really the context around it, right? If I see a big green candle, is it bullish? Well, it depends. It depends on where it happens and what the preceding price action was and where we're at in kind of its trading range and in comparison to moving averages and so on. Because just because you get a big upside day, well, yes, the price went up. Yes, it was a bullish day. We can say that firmly. We can say that that's a fact. It was bullish today. But the question is that a signal that is going to lead to more bullishness following, if that makes sense? So if you saw a bullish candle like that and the context around it was we'd just gone up and we've pulled back for a few days, and then you get a nice big bullish candle, yeah, that's a strong sign that tends to lead to more upside. If you had sideways price action and you were consolidating and then you started to break out and there was this big bullish candle, yes, again, nice bullish tends to lead to further upside, right? So when does it not act that way? Well, we call them exhaustions, and a way to think of that is a punctuation mark at the end of a sentence, right? It's kind of putting the final punctuation on this. And so if you've been going up for weeks, and within that, you're stretched in your current move, and price gets kind of extended, you get a big bullish candle here, I think the context around it is that that's more of a profit-taking signal. That's one where we say, boy, I'd much rather sell than buy, because this is not really breaking out so much. This is not really pullback or whatever. Now, we are in a little bit of a high base for 2 days, and it's break. I'm not saying that today's that day, but in the NASDAQ, it's a little more pronounced, actually. And it looks and smells kind of like exhaustion. We're going to have some of the biggest bullish candlesticks in stocks that we've seen in weeks and months. And think about it in context. Why, shouldn't they have been bullish back here on this pullback, or back here in the pullback, or even here on the breakout? There's a lot of places that one could buy that are more logical, that presented better risk to reward. This one feels like chasing, and that's kind of what happens is people are behind, people are losing. Part of it's short covering, right? People that have been betting against the market that are getting blown out of their positions. But make a long story short, it is not as bullish as just the candlestick appears, right? You can look at in equities, there's things called put to call ratios. How many puts are being bought versus how many calls? And it speaks to investor sentiment. When you're really bullish, you buy calls. When you're super bearish, you buy puts. And these are contrarian signals, meaning when people load up on the puts, when this gets aggressively bought, it's usually more of a bottoming point. And when people get crazy optimistic and start loading up on calls, that's more of a topping point. Basically, sentiment has gone too far, and the public is it tends to get these things wrong at critical points. Well, is it interesting to you that today has the highest calls being bought versus puts, the percentage, the ratio, and even back towards 2021 type of levels when there was really aggressive bullishness. So the point being, man, everybody's piling in now. Everybody's saying, "Oh, I should buy it." When we're at 40, almost 4,200, and we were at 3,600 just a few weeks ago, now they're going to chase in. Now they think I better get in before it's too late. Those are signs of exhaustion. I'm not so sure the market immediately turns down. What do you do when you're exhausted? You usually kind of go sideways first, and then you'll probably come down. And that's what I would expect, is that I wouldn't expect that this is a market that you're at risk of just getting way behind. Should it go higher for a couple more days? Yeah, probably so. But we're in the later phases of that. As we look at price action in currencies, I mean, this is about as quiet as you can see in a week. I just don't know that there's anything there that's, significant. The dollar's up a little, the Swiss franc down a little. Everything's kind of sideways. If you look at crypto, again, nothing happening except for Solana, which has specific news, not good news, right? Hacking, losing potentially tens of thousands, hundreds of thousands, millions of dollars for people. Pretty ugly situation there. As we look at the markets a little more fully, so for the rest of this week and kind of expectations, although we're above the 20 and 50, I think this is getting stretched, and we're, getting to where we're a little exhausted, a little bit stretched in some of these markets, very short term. I'm not talking about, that you're exhausted and never going to go up again, but it's just a trading call, right? We're at the kind of a little bit of a grand finale type of phase. If you were calling it a 9-inning baseball game, I'd say, well, this rally's probably in the eighth or ninth inning. We're getting in the late stages where within the next couple of days, it probably turns and really flattens out and even pulls back in price. So if we look at international markets, not quite as stretched. And if the US dollar, in fact, I would expect it to outperform, because I think the US dollar should probably experience a little bit more declines and so forth. I'm still of the mindset, I mentioned this the past couple of weeks, that to me, the end of the dollar's rally was somewhat, this was part of why we wanted to be bullish on equities. Once Euro USD hit parity, that was kind of that big capitulation, that kind of final grand finale for USD. So I think that was it for a while, for months probably, in terms of USD. Will it chop around? Yes. Will it trend up and down inside? Yes. But I don't think it's on the run that it was previously. And in fact, I'd even expect it to give some ground and probably be lower than current levels in the coming weeks ahead. So that should be better for international stocks, which may outperform here in the short term. Crypto in a little bit of a grinding upward pattern, a little bit of higher highs and higher lows, but kind of disappointing price action when you think about how strong some equities have been. You'd kind of anticipate that maybe this would have recovered even more. Still, I anticipate a little bit of a bumpy road, and I don't think that low is necessarily the low. I think we'll at least go back and test it one more time and then see, if we can hold from there. The rest of this week, kind of a quiet week until Friday. There's not much remaining here. So tomorrow you get the Bank of England out. Not going to be a surprise that they're hiking rates. Everybody seemingly is hiking rates, and maybe even Japan's going to join the party. But expectations are for a 50 basis point hike. Certainly, if you're trading the pound, that's one to watch carefully. And then on Friday, we get employment out of Canada and the U.S. Expectations are for a little bit of a drop down, 250,000 net additions. Employment rate, those numbers still very strong here in the U.S. at 3.6%. That's considered full employment. and very good numbers. Now, are we going to start to see that shift? Are we going to start to see some layoffs and so forth? I would anticipate it. I think we're in kind of heading towards recession and such, which, like we talked about last week, is not the end of the world. Historically, most recessions are shallow recessions. They're not severe, they're not global financial crisis type of recessions. And I'd expect this one to be kind of that way, that it's going to be, a choppy period for a while. I mean, my best guess for the next year or two is that it's just a bumpy ride. It's just there'll be some booms and some busts, but I think it's more of a time consideration than price. I don't think there's a ton of upside in price action in most assets, and I think, there's more downside risk than upside reward at this point for the next year or two. Currency analysis, let's get into a few different ideas here. So let me jump over, and if anyone has anything specific that they want to look at, please feel free to fire away. I'm going to highlight a few different things. So the pound is going into the Bank of England tomorrow. If we look at it on the daily chart, here's what I see in pound yen. And remember, I'm looking to short all these yen pairs. I mean, that's a thesis that I really like. For me, the pound yen is kind of in this descending triangle type of pattern, and I do expect it to move down from there. So this little bounce is, to me, more of a shorting opportunity than anything else. You could even call this a little mini, cup and inverse cup and handle type of dynamic. Any way you slice it, I think, trading the pound tomorrow, what I would like to trade on the Bank of England is pound yen to the downside. You may wait till after the announcement. Even if this were to bounce a little bit, I'd probably still look to get short unless it had a whole lot of energy to the upside. If it breaks hard and it breaks fast and violently higher with a ton of energy, then I don't take that trade. But any type of mediocre reaction, quiet reaction, even a breakdown, etc., I'm going pound yen towards the downside. So that's on the Bank of England meeting. If you come into the 12-hour, it looks pretty solid in terms of the trend has started to materialize to the downside, and we're in a bear rally, right? We just broke to lower lows, so this is very likely to set a lower high, and it's failing right where it broke down. I mean, frankly, it's not a bad idea to get short here and have a tight stop. And if you get stopped out before the Bank of England meeting, fine. If it's around break even, you might even take off the trade prior to the meeting. But if it were to drop back going into the meeting, you could already have a position and a profit. So sometimes I'll front run a event, but I'll need profit. I'll have to be profitable in the position to hold it into the event to avoid some major slippage and so forth. But that to me makes sense. And then, I mean, pick your poison. It really doesn't matter what you look at. You could pull up CAD yen, similar, breakdown, bear rally. Let's go Aussie yen, breakdown, bear rally. Euro yen, breakdown, bear rally. Kiwi yen, breakdown, bear rally. Swiss franc yen, I mean, that's a similar dynamic, right? We could go US dollar, Japanese yen, broken down, bear rally pattern. All of them. I mean, I'm going to be shorting currencies against the yen, and I think it's the only thing I'll trade the rest of this week. I don't know. We're in a quiet environment a bit. I don't know that there's a lot that excites me. Part of why the yen is selling off and you're getting this bounce for the past little bit comes back to risk, right? Usually you sell yen if you're taking risk, and the equity markets are rallying and everybody's getting super optimistic. The yen has already moved into a down, well, other currencies have moved down versus the yen. The yen has already moved into an uptrend. This is the counter trend, move. So I really like the yen to continue to perform. I think the charts support that, and I like it just in terms of the setup. So that one's definitely interesting to me. We had a couple of requests here, so let's look at a few of those. One of them is US dollar Swiss franc. So if we come into USD Swiss franc, I'll work my way forward as per usual. Usually I like to look at something on a little bit longer time frame and kind of get the big picture, and you can see a little bit of a downward sloping, a little bit of a lower low, lower high type of dynamic here. So we're in a downtrend on the longer time frame. On a little bit shorter time frame, similar to the yen pairs, it's a bear rally. I think you're looking to short this. 4-hour chart and 1-hour chart may not be as kind of set up, right? But I would be looking to short this. I mean, that would be my general take, is the short-term trends. So, I would think of it in terms of you always want to trade, if possible, with the longer time frames. So if the longer time frames are bearish, which they are, I'd be a little more cautious buying it on a short term, on an hourly chart, but I'd be much more excited to short it on the hourly chart. Well, you may not have the setup yet for doing that. If you were trading on a 1-hour chart, you'd have to wait for that trend to roll over, but that's the trade that would excite me, is more on the short side. We had a request for CAD versus the Swiss franc. So let's take a look at that. And CAD Swiss franc, so here's the daily. Similar type of dynamic, and maybe even a little bit cleaner in that, you kind of have the descending triangle and we're right at the downtrend line. You look at that, you probably draw this downtrend line stretching back here and kind of look at this in terms of the dynamics, and you're kind of at that downtrending line slope, if I can get that to cooperate. And then obviously you have the descending triangle and so forth. I don't love, that did not click where I wanted to. Come on, cooperate. My drawing tool's going a little crazy on me. See if I can get that to come down here. I'm not sure what it's doing, but anyway, there's your descending triangle. And you can see, I mean, I would even just draw the recent little slope as kind of that. But anyway you slice it, you're basically in this descending triangle pattern, and very good chance that it kind of stalls out and heads back towards the lower end of the range. So CAD Swiss franc could be interesting as well on those longer time frames. Now, if you're looking at shorter time frames, it's probably not going to agree. The 12-hour, the daily chart, they're still bearish. You come into a 4-hour or a 1-hour and you're starting to see a bullish move. You're starting to see a bullish turn. Which one do you think wins? Do you think these short-term reversals are going to lead to a longer-term reversal? It's possible, but usually the long-term trend wins out, right? So all things being equal, I'd probably give it the benefit of the doubt that way as far as failing here and heading back down. Japanese yen has been ranging with June 2022. Yeah, I think my take is that the yen should start to reverse. This is part of why I said, I haven't been excited to short the yen pairs, but I've said I wouldn't feel comfortable, in a short yen trade. I'm not ready to buy the yen, but I don't feel comfortable really betting against the yen because all these central banks are moving and the Japanese yen has the most dry wood that could potentially catch a fire. And I think what we've seen is the start of that. Now it could be wrong, right? Maybe it's nothing, but if you kind of look at this daily chart, the breakdown here, This is US dollar, which has been a tremendous currency, and it's currently breaking down versus the yen. And look at that on the daily, right up there underneath the 50 period moving average. You kind of have a possibility of an inverse little cup and handle, which is just, I mean, the basic idea behind the pattern is that you've established a level of support, you bounce big, you come back, you retest, the market recognizes the support and responds, and then that bounce is mediocre. And when it fails, away we go. And that's what I think is that the Japanese yen has seen a turn that I would expect it to go for for weeks and maybe months. I don't think it's pricing in or has priced in, a shift in policy in Japan, which I think they have to shift a bit. Maybe not that they're going to come out crazily with huge rate hikes but they don't have to. They've still been stimulating. They pull those back. They do some things to change what their policies are, and it can have a huge, huge effect because there is just such a massive short yen position. So that's kind of interesting for me in terms of trade. Yeah, I mean, it's kind of a boring, it's a boring time in the market. I don't know what else to tell you in terms of, look, you go through these phases where usually the summer months are kind of quiet, kind of sideways. This year has not been that way. This year there's been plenty of excitement. Well, now we're getting a little bit of a lull. Now we're getting a little bit of a slowdown. If you look at the VIX, the volatility index, you can see it falling off. There's just less fear, less panic, less trepidation, which leads to smaller price moves and a little bit quieter market. That's okay. We're probably going to get back to a more noisy market in the not too distant future, but things have a way of kind of they ebb and flow, right? It kind of comes and goes. And right now there's not a lot of excitement in the currencies, but I think those yen pairs, look at shorting something against the yen. USD yen, you could short that. Short something against the yen, in my opinion, is how I'm looking at it. So for the rest of this week, we'll have a little bit going on. We're going to trade the payrolls, which will come out on Friday. We'll have the preview of the payrolls. We'll send out that recording on Thursday. So stay tuned for that. For anyone trading the Bank of England, I think pound yen on the short side is what I'm going to be looking at, focused on and looking to trade. Hope you've enjoyed the midweek. Have a great rest of your week, and we will see you next time. Goodbye, everyone.